Are we in a bear market? Let's talk about this today. Taking a quick look at S&P's 500 ETF, we are trading below that 200 moving average on the daily chart with a series of lower highs and also lower lows. We have not been able to recover against that 200 moving average on the daily chart. I also like to step back out on a monthly chart, looking at the max data, taking a quick look at some of these other pullbacks that we had in the chart's history. Now, back in the dot-com bubble, we had a pullback over here. This is on a monthly chart. This is 29 bars, so 29 months. So over 2 years, this was in a downtrend over here, back in the early 2000s. Now, back in 2008, financial crisis over here. This is 18 bars, so 18 months over here, a pullback. In 2020, we had a pullback over here. This is only a 2 months pullback, and it bounced back up really quickly. So over here, I'm not exactly sure what's going to do. Is it going to have one of these really drawn out pullbacks taking a year and a half, 2 years? Or is this going to be a few months before the uptrend continues? So we don't know, but right now, there's more downside correction, more energy to the downside and upside. So looking for shorts in the markets. If you're looking at my playlist, you know that I've been looking at different charts. I've seen weakness in the charts in different sectors. Talked about Adobe, a few other stocks that have been in a downward trend. And those are still opportunities that we can take to profit even as going down. Looking at the Nasdaq, this chart as well, trading with a series of lower highs and lower lows, trading below that 200 moving average on the daily chart. So you can draw a trend line right here. Has not been able to break up above that trend line. Diamonds over here as well on the daily chart, also trading below that 200 moving average. Russell 2000 also trading below that 200. And over here we had a very nice three-price relationship right around 206. And so that was a shorting opportunity. Taking a quick look at the transports over here as well, trading below that 200 moving average. I'm going to jump down to my X factor, just looking at the different sectors, see what it's doing. So we got financials. So we're in a bear market here, trading below that 200 moving average. And that's how I define it. When price is closing below that 200 moving average with a series of lower highs and lower lows, it's a bear market for me. I'm looking for downside correction, I'm looking for shorting opportunities. Over here we have real estate trust. This one's also in a downtrend below that 200. Communications, this one's getting hammered for quite some time, with Facebook. So definitely downward correction. Home builders, trading below. Utilities, this is one of the few bright spots. This one is still trading above that 200 moving average. XLP, currently trading below. This is consumer staples. Retail's been trading to the downside as well. XLE over here. This is one of the bright spots. In addition to utilities, you have the energy sector. It's been just pushing to the upside. With oil climbing higher and higher, it's pulled back considerably, trading currently under 100. XPI, biotech also been pulling back. XLB, materials, also trading below that 200. XOP, oil and gas, another bright spot, so trading with a series of higher highs and higher lows. So what you want to do, if you want to go long, you want to find sectors that are still very strong. And that's what I've been doing the last couple of weeks. I've been finding myself in the energy sector and other stocks. XLV, this is healthcare. And healthcare currently is also trading below the 200 moving average. Now this one's been more of a sideways pattern. So that's really a lot stronger than if you were to compare this chart with communications. Technology also been selling off over here as well. You can draw a couple of these trend lines right now, which is in this downward channel. Now if technology decides to really pop to the upside with a lot of strength, let's just say a lot of money starts to flow into these big tech companies, then you should see price getting up above this trend line, climbing its way above that 200 moving average on the daily chart with a series of higher highs and higher lows. Over here we have consumer discretionary. Okay, so Amazon, Home Depot, McDonald's, these guys are also in a downtrend right now. So whatever you do, you just have to follow through. We are just looking at the broad markets. You actually don't need to know where the market is going to make money. What you do need is proper setups. You need to know what you're looking for, how to use your Fibonacci tools correctly, how to find either symmetry support or symmetry resistance along the way, defining a three-price relationship, and from there, you're allocating capital if you do get a trigger on a 15-minute time frame, because we are swing trading stocks or cryptocurrencies. And from there, we kind of take decisions from day to day. And I just want to share a little bit about what I think about the overall markets. Leave a comment below and let me know what you think, and I'll talk to you soon. If you'd like to learn how to find high probability setups using Fibonacci analysis, check out my course in the descriptions below. If you haven't subscribed to our channel, subscribe now. Hit that notification button. Our first goal is 1,000 subs. We go over cryptocurrencies as well as US equities. Love to hear from you in the comments area. Talk to you soon.